What is necessary for better silver and gold prices? Within the stacking community, you see a lot of people talking about buying the dip. And yeah, in theory, buying the dip is a good thing. Those of you that are newer to stacking and you're asking yourself, what does that mean, buying the dip? Basically, that just means that if you've got, let's say, the spot prices of silver and gold kind of going something like this, right? And then you see it pull down, right? Buying the dip would mean trying to buy when there's a pullback right there when the prices are lower. That means buying the dip. And we have seen silver and gold acting very peculiar this year, mainly in part due to the coronavirus and what it's been doing to the world economy. But having said that, there are some very key things in order for all of us as stackers to be able to take advantage of these dips. So what is necessary for better silver and gold prices? Well, the one thing that we need to see is a strong dollar. And a strong dollar typically means that we will see weaker prices in gold. So when we see the dollar surge in value, typically we see the precious metals prices plummet. So that is one thing that we need to happen in order for better silver and gold prices. The other thing, though, that we also want to see as stackers is a strong stock market. Now, a strong stock market leads to weak prices in silver and gold, theoretically, and most of the time. Not always. Sometimes we've seen those two kind of go move at the same trajectory. But when people are talking about a strong stock market being bad for silver and gold, for us as stackers, at least for myself, I look at that as being a great opportunity to purchase silver and gold. It's because a lot of people don't want to tie their money into, silver and gold when there is in fact a red hot stock market. Why would people want to tie their dollars into silver and gold, which doesn't necessarily grow as fast as stocks would? So when there's a strong stock market, people tend to put their money into the stock market, and they prefer the stock market so that they could grow that money as opposed to putting it into silver and gold. The other thing that a lot of people have been talking about is they want to see a Democrat in office, and that a Democrat being in office is an indicator that gold prices will drop. But that isn't always necessarily true. In fact, I'm going to put an article in the description down below on Kitco that you could read, which is talking about the fact that it doesn't necessarily come to which president is in office. It's more in line with the fiscal policies of that president. The one thing, though, that you could say is that the Democrats tend to tax people more, and because they typically have more spending, you would see gold and silver prices kind of go down. But again, look at the article. I'm going to post it down below in the description. So this isn't always the case. If you're just basically generalizing, summarizing, and just saying you need a Democrat in office in order for gold and silver to perform weaker, then, that's just kind of like a general statement. The other thing, which is pretty much like economics 101, comes to a surge in supply. Okay, so what is necessary for better silver and gold prices basically is just a surge in supply. When we see a surge in supply, you actually see better prices when it comes to silver and gold. That's just, again, the just fundamentals of economics. And we saw back in March when basically we saw the spot price drop all the way down to around like $11 for silver. But when it came to buying physical silver, number one, it was still very expensive on a lot of the dealers' websites who even had it, right? It was still in the $25, $26 range. And the other thing is you really couldn't get your hands on it. So when there's scarcity, the price of silver and gold maintain its value or even is higher because more people want it. It's just supply and demand. And the other thing that you want to remember is that the premiums, they maintained their highs when we saw that $11 spot price. So once there was a surge in supply, once we saw that the bullion dealers ended up getting some of their stock refilled, then we saw some prices kind of come back down. As those prices were kind of coming back down, though, we did see the spot price kind of go back up. The other thing, too, you have to think about this. Before coronavirus and before there was any production shutdowns and mines were closed and what have you, and the transportation was basically put on hold, we saw that silver was basically in the mid-teens for a very long time, and a lot of people weren't even buying silver and gold, and there was just silver and gold basically everywhere. But once we saw this scare, everybody started to basically flood the market trying to get their hands on silver and gold. So that makes the price go up. Simple economics, basic fundamentals. The other thing, what we need to see for a better prices, we need to see a strong economy. So what is necessary for better silver and gold prices? A strong economy. When we have a strong jobs report and the economic outlook is bright, and there isn't much fear and people are confident and they're spending and the economy is chugging along, silver and gold kind of takes a back seat there, and the prices kind of come down a little bit. Now, the one thing, in my opinion, that we really need to see, and this is the most important out of all of these things, in order for us to see a sustained price drop in silver and gold, is I'm going to put a star on both sides, underline it, and this is key right here. If anything, this is the most important out of all of these, in my opinion, and here's why. When we saw, going back to this example, when we saw this dip back in March, and we saw the spot price just kind of plummet, we all saw that the dealers maintained their prices at, let's just talk about silver for now, at around $26 an ounce, roughly. And we saw the dip all the way down to $11. And we saw that the dealers didn't budge from these prices. And once this started kind of coming back up gradually, the dealers started raising their prices, right? And we ended up seeing eagles all the way up to like $37 a piece on some sites, right? So when I'm talking about a long sustained pullback, we need to see the prices not drop $1 one day, another $1 the next day, and then 50 cents the next, and another $1 the next day. Because what's going to end up happening is that the dealers, right, they're going to maintain their prices. They are not going to budge. So if the dealers are buying at, let's say, $24 an ounce, let's just say, right? We have this going up, down, up, down, up, down, and then coming all the way down here. Right? If they're buying here at $24 an ounce, and we see a dip, right? And then we see even a bigger dip, they are not going to sell what they have in stock for less than what they paid, which is why a lot of people were very frustrated with this whole situation, that major discrepancy. A lot of people thought, oh, spot price is coming down to 11, therefore the eagles must be $13, $14 a piece. But that's not the case, because the dealers, they were buying these at higher prices, so they're not going to let these go for less than they've paid for. They're going to keep their prices in check. And that's just something that all the dealers did. They're not in business to lose money. They're in business to make money. So in order for us to see a long sustained pullback, we need to see a bunch of these things happen in order to see a long sustained pullback. And this is what's going to get us where we want to be, right? This is what is necessary for better silver and gold prices. Because if the prices gradually come down, right, just gradually, and the spot prices, pardon me, aren't fluctuating so wildly, and they're just kind of gradually coming down as the market still continues to add supply to the mix, that's when you'll see the spot price come down, and that's where you'll see the premiums coming down. If those things are kind of coming down together gradually, right, then you're going to see the prices that we want. But if you see just the bottom drop out and the prices just plummet, they are sitting, remember, the dealers are sitting on the physical gold and silver. They are not going to let this stuff go for less than they paid. It just wouldn't work out for them. So this is why we need a long sustained pullback. That, to me, is the main reason, the main thing that we need for what is necessary for better silver and gold prices. If you have any other ideas as to why or what we need for better silver and gold prices, also please make sure you comment down below. Let us know what I left off this list, and I'll talk to you guys on the next one. And I just want to quickly thank these elite channel supporters, and if you haven't become a channel member, please check out the awesome perks and join today. With that, I'm the Stacking Stormtrooper. Check out these videos. Until next time, long live the Empire.